Hello, welcome to Global Business Insights. This is Bode Oshosami on another episode where we discuss the latest issues focusing on finance, business, and macroeconomics. First, we look at crude oil dynamics as OPEC says in a statement that its members would leave all output cuts in place until the end of December. Amid very tepid demand, the somewhat unpredictable Middle East geopolitics, and the OPEC dynamic all seem to be the key drivers in the final quarter of the year for crude oil. On Thursday, we get U.S. jobless claims and post-monetary policy decision press conferences by the Bank of England's Bailey and Fed Chair Jerome Powell, followed by the consumer sentiment poll released by the University of Michigan on Friday. The Bank of England is expected to vote for a second interest rate cut this year as the central bank focuses on a longer-term picture of slowing inflation. Indeed, it could be the most consequential week of the year, and with no October surprise and polls unable to tell who will win. Even if we knew the winner, there will be a marked difference between what is done and what was promised in a very toughly fought battle, with both parties offering the moon. Still, markets are at best nervously optimistic as we see all key US market indexes closing higher. That was on Friday. The gold price also edging higher as uncertainty around the US elections, sending many looking for safety. A key committee of China's National People's Congress meets this week with analysts expecting Beijing will approve a fiscal stimulus big enough to lift the world's second largest economy. The Nigeria Customs Service has successfully facilitated the country's first shipment to Kenya under the African Continental Free Trade Area Agreement. Lucky Fibers, that's a subsidiary of the Tolaram Group, is said to be the first company to export goods to Kenya under this initiative. Another shipment under the agreement is scheduled to go to Ghana. Olusegun Olutayo, senior trade expert and lead trade enablement person at the Nigeria AFCFTA Coordination Office, says the Nigeria Customs is doing very well in facilitating intra-African trade. On Friday, Fitch Ratings upgraded Egypt's long-term foreign currency issuer default rating from B- to B with a stable outlook. And the IMF boss, that's Kristalina Georgieva, she's in Egypt. We'll talk about some of the comments she's making there. Expectations have been up since Beijing signaled focus on stabilizing the economy, following a slew of weak economic data amid deflationary pressures. The National People's Congress Standing Committee has the legislative power to implement and amend laws and approve budget adjustments. They will be meeting, that's the committee, from today through Friday. Others are of the view that Chinese authorities won't move as aggressively as they want to see a less leveraged environment. Analysts also think newly approved fiscal packages, if they come, will focus on local government debt as revenues from the troubled property market are much lower, and that's creating challenges. Local governments have been struggling with hefty debt loads because the revenue they typically received from land sales has dried up as the property market slumped. That has been a problem for the economy because local governments have typically been the vehicle for stimulus. Other measures will aim at reviving domestic consumption. There is talk of waiting to see how the US elections go and saving some ammunition for a different and maybe tougher environment for Beijing. By the end of the meeting, the National People's Congress would have had a clearer idea of changes in the White House, if any. Others are of the view that any new fiscal spending plans to prevent a significant slowdown in 2024 will be too little too late, nor will it be enough to drive stronger growth in 2025. The world's largest oil exporter and 7 others, including Russia, Iraq, the UAE, and Algeria, have said in a statement that they are delaying any further output cuts for another month. Previously, an increase of crude output by 180,000 barrels per day was planned for October. Another postponement will support prices, but not enough to compensate for weakness in China's crude oil imports as U.S. production hits new all-time monthly highs. That was in August. Looking into 2025, a soft economic outlook in a more resource-efficient environment implies global demand will most likely continue to slide. EVI had predicted for the year that Brent crude would average in the $75 to $80 range. Most analysts now see Brent crude showing much volatility, averaging $80.55 per barrel this year and $76.61 in 2025, a downgrade from earlier projections. The news came in last week that Iran was about to attack Israel from Iraqi territory, reactivating fears of a regional war in the area that might affect global crude supply, pushing prices slightly higher. But the attack did not happen, causing prices to later drop dramatically. Analysts do not see an environment where demand is healthy and supply tight enough to get Brent crude anywhere near the 80s, with Brent now over $74 a barrel. Many do not also see a significant impact from the US elections in the medium term. Ramping up supply in the long term will also be held back by lower prices, disincentivizing investment. The U.S. oil majors saw boosts in production from the Permian Basin. Gains from acquisitions and efficiency gains were also mentioned. In Europe, Shell plc and BP hiked production 4% and 2% respectively as companies set aside their net zero targets. Oil prices are declining, barring geopolitical shocks, and analysts are now seeing sub-zero Brent. Apart from record high production capacity in the US, efficiency gains as well could also mean crude may still be gushing out of pipes even at sub $50 a barrel, given that Exxon projects in Guyana and the Permian, about 25% of overall production, can pump crude at a cost less than $35 a barrel. Higher cost and less efficient environments like Nigeria may, however, struggle for investment. On the politics, Donald Trump wants more oil drilling in the US, so a Trump victory may mean a knee-jerk rise in oil stocks, while a Harris victory is good for solar, wind, and EV. But a trade war sparked by higher tariffs could be a net negative for oil and natural gas because of potential decline in US crude exports to China. Globally, there's plenty of oil, but not enough demand growth right now, and US production under either Harris or Trump means, I would say, more oil coming into the market. Oil is expected to stay weak, barring a geopolitical shock, like we always say. For Nigeria, low global crude prices have fiscal implications and imply that the costs of producing Nigerian crude have to be even lower to attract investment to get the right margins. Prices of petrol, now deregulated, should also go down. That's good news for motorists. IMF Managing Director Kristalina Georgieva yesterday hailed Egypt's initiatives to enact difficult economic reforms amid regional turmoil as she visits the North African nation ahead of a review starting today, a review of its $8 billion loan deal. Speaking alongside Prime Minister Mustafa Madbouli, she said Egypt has shown remarkable strength in challenging times, and recent steps have provided its economy with strong buffers against external shocks. IMF projects Egypt will grow 2.7% this year and will spike up to 4.1%. That's GDP growth in 2025. She added in her interview 3 priorities for Egypt. First is to lower inflation, adding that high inflation is eroding purchasing power. Second is to bring down debt. While Egypt faces growing spending demands, including health, education, social safety nets, the green transition, the digital transformation, creating fiscal space will still be essential to build the resilience it needs against future shocks and invest for the future. Third is to create conditions for higher growth. With a level playing field, the private sector can help jumpstart productivity, which is so important to sustain growth and create high-quality jobs. On Friday, Fitch Ratings upgraded Egypt's long-term foreign currency issuer default rating from B- to B with a stable outlook. The agency cited the recovery in Egypt's net foreign asset position, supported by a rise in international reserves from about $11.4 billion in March to $44.5 billion by the end of the third quarter of 2024. Asia Pacific markets rose while US stock futures were mixed in overnight trading. That was on Sunday. All eyes are on the US presidential elections tomorrow. In China and Hong Kong, equities inched higher ahead of a meeting in which policymakers are expected to approve a fiscal stimulus package. Well, that's it from me on this episode of Global Business Insights. This is Bode Oshosami. Thanks for sharing, and again, thank you so very much for watching. Bye-bye.